Bitcoin's price is going down again. And the move, unfortunately, has everyone staring straight at the chart, as if the chart has enough information to tell us what happens next. Bitcoin tried to push back into that $97,000 zone and slipped right off of it again. And most people, or those with trader or short-term mentalities, saw it as rejection. What they missed was the signal behind it, a fundamental one. The one that shows the system just changed direction. So today we're going layer by layer into what flipped and why the market feels heavy right now and how this entire setup can reset the moment. Real liquidity starts flowing again because we know quantitative tightening ended today, but there's a lag. And that's what we're going to get into in today's video. And we're also going to take a look at the Japan carry trade unwind, the new round of Tether FUD, and a few other forces hitting this market at the same time. This is one of those moments that only makes sense when you see the big picture. It's so important to zoom out. So all right, let's get into today's video. All right, so let's start with the part everyone sees most immediately on the chart. Now, if you know me and you've been following my past videos, you know that the prices we see right now are very likely manipulated by larger forces. They don't, and in the long run, they don't reflect where Bitcoin is going. I'm a fundamentalist, and for many reasons, many of which I've covered in my past videos, I know that Bitcoin's going up to $1 million plus someday here in the very near future. And the price we see in the charts for now are like the weather. We cannot be too bothered by them. We have to keep our eyes on the long term, on the long horizon. That said, we will just briefly cover what is going on in the most immediate prices we see in Bitcoin and across the crypto market. And then we'll get into what's really going on. But okay, we know that Bitcoin tried to recover that $97,000 zone and it slipped right off of it again. And that one single rejection has many traders feeling apathetic at this point because it showed that the market, well, it showed them anyway, that the market is shifting from an uptrend that takes dips into a downtrend and then gives bounces. And a lot of this sentiment, as I was saying, because the majority of the crypto market that we know are made up of traders that are short-term minded. Therefore, we can feel their emotion across the entire crypto space. Even the total market cap is rolling over. We see that volume is thin, and buyers, once again, the 99% that are not the smart money investors and that are primarily made up of a lot of trader short-term mindset, they look very tired right now. Meaning the fear and greed index we see is low and keeps sliding lower towards apathy. And during apathy, we know people pause. They don't know what to do. It's like that fight or flight instinct. Apathy is on the pause and do nothing side of things. Anyway, we see that a lot of people have stopped making decisions and they're waiting for someone else to move first. From this 99% sheeple, I don't want to be derogatory, but from the sheeple population in the crypto market, because we know that institutions are not scared. Sovereign nations are not scared. The biggest corporations in the world are not scared. They're buying Bitcoin. Bitcoin is on sale for them right now. And this is why I always encourage us here at my channel to copy in the footsteps of smart money investors, those who know more than we do, and copy and model off of the biggest institutions and the actions they're taking. Because it's as the quote says, we have to be fearful when everyone else is greedy, the 99%, right? The traders. And we have to be greedy when everyone else, or the 99%, is fearful. Anyway, and because it's now December, we get all of the typical end of year noise on top of the current conditions. We see funds are rebalancing, portfolios getting adjusted, and some people having to harvest some losses to pay for their taxes, which you can't blame them, but this adds to the market conditions we see. And historically, Bitcoin gets pushed around, or the price does temporarily anyway, by flows like these. So that's what we're seeing going on right now as well. But okay, this is all the superficial level. The next part of today's video is the real shockwave underneath temporary price action. So let us switch gears because this is where the story actually starts. Japan's 10-year government bond yield just jumped to 1.84%, which is the highest level since 2008. It moved more than 11% in a single session. And this matters because Japan has spent the last 30 years keeping those yields near zero. And when rates stay that low, as they have, Japan becomes a global funding hub. Money is cheap to borrow. Traders and big institutions take that cheap yen, borrow huge amounts, and move it into higher yield assets around the world. That's the yen carry trade. And it grew into a massive engine that pushed trillions of dollars into US treasuries, European bonds, and emerging market debt and global equities. So when Japan's yields suddenly spike, the entire engine starts to unwind. Borrowing becomes more expensive. The math behind those trades change. Money that used to flow out of Japan starts flowing back in. And this is happening at the exact moment the US is ending quantitative tightening, running $1.8 trillion deficits and paying more than $1 trillion a year in interest. Japan, we know, holds $1.1 trillion in US treasuries, and rising yields at home pull that capital back. China has spent years reducing its treasury holdings, and the Federal Reserve is still in quantitative mode. The biggest historical buyers of US debt are stepping back at the same time. And this combination creates real pressure on the entire funding system. The global liquidity engine is shifting, and Bitcoin is sitting right in the middle of that reset. But all right, now let's talk about what the reset looks like in real time, because this is the liquidity delay no one is talking about, or few people understand. People heard that quantitative tightening was ending on December 1st, today, and assumed that liquidity would turn back on just like the very next day. And we know that's not how it works. In 2019, the Fed ended quantitative tightening on August 1st, and the balance sheet kept shrinking through August anyway, because Treasury maturities settle later. And we're seeing the same pattern now. Quantitative tightening, or QT, ended on paper, but the Fed's balance sheet may keep drifting lower into early 2026. Liquidity hasn't returned yet, and markets can feel that lag. And this is why Bitcoin is drifting. That's why everything feels heavy. The system is waiting for the next flow of liquidity, and that flow has not started yet. And here is where things start getting interesting inside Bitcoin's own structure. And this is the internal reset forming under the surface for Bitcoin. Because we know that Bitcoin closed its third week below the 50-week EMA, which usually confirms the momentum shift. But it bounced right off the 100-week EMA around $85,000. That's the first support. Below that sits $82,000. That number matters because it's the active investor level and the level many IBIT ETF buyers entered at. People pay attention to where they entered, and they make decisions around those levels. And there's another layer beneath that. That demand creates a support zone near $80,000, which is an important level to watch. Then we need to look at the capitulation metric. It just hit a new all-time high. And the last time this happened, Bitcoin rallied 50% shortly after. These readings show heavy reset behavior across the market. Now, if we add one more thing to this combination we're outlining together, we see that strategy added 130 Bitcoin and set aside a $1.44 billion reserve right after Saylor's green dot post. That is the definition of conviction during a reset. The biggest corporate holder of Bitcoin is still quietly building. And this brings us to the conversation that's been running nonstop across the market these last few days. Let's talk about Tether for a second, because this conversation took over the market fast. Analysts pointed out that Tether has more than $170 billion of USDT in circulation, but only about 30 million of that sits in actual cash inside banks. Almost everything else is invested in treasuries, Bitcoin, gold, secured loans, and other assets. Tether's attestation shows around 174 billion in total USDT that people can redeem, and roughly 181 billion in assets backing it. The reserves are there. The debate started because of how those reserves are held. Most of the backings sit in treasuries. Treasuries, we know, settle slowly. They do not convert into cash instantly. So if someone ever wanted to redeem tens of billions of dollars in a single afternoon, that would require real banking access, not government bonds. And that's why people compare Tether to Circle, because Circle uses more traditional banking rails and redeemed 34x more stablecoins than Tether over the past year. They can move money faster during high pressure moments. Paulo Arredondo, Tether's CEO, pushed back on the criticism. He said Tether Group holds 7 billion in excess reserves, 23 billion in retained earnings, and a total group asset close to 215 billion, earning roughly 500 million a month from treasury yields. So the assets exist. The real question people are arguing about is speed. How fast the system can process redemptions if conditions ever get extreme. Under normal conditions, everything runs smoothly, and the market isn't showing any stress right now. And while the market is focused on Tether, a much more important development has started picking up steam. So let's talk about the policy turn that could change everything, because the odds of him becoming the chair just jumped 72%. And Hassett has been very clear about his stance. He said, "I view low rates as essential for serving the economy." So in a world where Japan is pulling capital back home, the US is issuing record debt, and QT is ending with a lag, a Fed chair who prefers lower rates changes the entire path of liquidity. It fits the direction the system already needs. Lower rates mean cheaper capital, and cheaper capital creates liquidity. Liquidity lifts risk assets, and Bitcoin historically moves first. So that brings us to the big takeaway. And the takeaway is this: Bitcoin's price action is the distraction. The real story is the hidden shift beneath the entire system. The real story is in the sovereigns and the institutions buying Bitcoin while everyone else is freaked out. The real story is in the fact that Japan cracked a 30-year liquidity anchor and that quantitative tightening ended on paper, even though the flow of liquidity hasn't returned yet. So while all of this plays out, support is forming between $80,000 and $85,000. Capitulation signals are peaking, and exchange reserves have slipped into levels last seen in 2018. The same kind of backdrop that has sparked major moves before. The Tether debate looks clearer now, and strategy is still accumulating quietly in the background. This is the stretch of the cycle that feels slow, heavy, and confusing. And some of that is by design, and the rest of it inevitable and just temporary. So as long as you know, or we can know, what we're experiencing and why, that gives us a sense of grounding and hopefully allows us to persevere, which is my wish for you, that you not be tossed around like the greater forces manipulating this market, as I believe is going on, would want you to do. It is my wish that you stay steady and buy more Bitcoin if you can, because what we're seeing right now is also the same setup that has appeared before every major expansion Bitcoin has seen. The system shifts long before the price follows. And once liquidity turns, the entire picture changes. So stay informed and don't be moved or affected by these temporary prices. As long as you have a good job or you have good passive income, multiple revenue streams, and can hang steady, you are okay. You do not need to panic, because remember, the 99% of everyone who's panicking right now or not doing anything right now are sheeple. I'm sorry, they're people who don't understand the bigger picture, or they're traders. So obviously they're sitting this one out because Bitcoin hasn't made any definite move in any definite direction. So it's not a good time for them to be trading. Okay, but if you're a long-term investor, a fundamentalist, then you know Bitcoin's going to $1 million. So you have nothing to worry about. And if anything, just buy more. So that's it for today's video. I hope you gained value. And if you did, then just like the video and share the video with somebody who needs to know what's going on. I love you guys so much, and I'll catch you guys here tomorrow.